how many, in your experience, Tanya, how many loan or sales have a carry or a note carry? I have to get it out of here yet. Where the seller carries a note.
I try to do as few as possible, but the lenders that I work with don't like seller notes. There are some lenders that want seller notes. They want the seller to have 10 or 15% skin in the game after closing. The sellers I work with, or I'm sorry, the lenders that I work with don't want that. They want to do the entire loan. Reason being that on an SBA loan, the amortization is 10 years. Most sellers don't want to carry a note for 10 years. So they want the terms to be maybe 3 years or 5 at the outside. And so what does that do to the payment? Well, it increases the payment. So if you have a tight, a deal that's running a little bit tight, cash flow wise, you're creating a
Jeopardizing.
problem and
Yeah.
jeopardizing the ability. And so, the lenders I work with say, no, we want to do the whole loan. We want the entire thing amortized over that 10 years. We just want to do it that
You
way.
could do a 10-year
But
amortization with a balloon.
yeah, and I've done that too.
Yeah.
10-year amortization with a balloon after 3 years so they can go, refinance. I've seen other people that have done, got one right now, a client where the buyers are trying to do a 5-year note interest only due in full at the end of 5 years. And it's kind of, and I don't know. At the end of the day, I tell sellers, especially the ones that are trying to retire, be happy with what you get at closing because there's a good probability that you'll never see a dime from that note.
That's,
So I've just seen that happen too many times.
yeah, that's true. That's
What
my
happens
case.
on,
Yeah.
what happens when people default on their note, Tanya? I mean, if their payment's due next month and they don't pay, what's the seller, in your experience, what's the seller doing about that default?
It depends. So on a small note, you figure if a note is 50 or $60,000, it's going to cost more than that to sue somebody. Not initially, initially you can file the lawsuit and all of that, but to actually get to a point where you go to trial is going to run in California probably 100 to $150,000 in attorney's fees. So it doesn't make sense economically to chase a $50,000 note.
How about the note for 450,000? I have a case now,
Mhm.
450,000. So,
Yeah, I mean that's worth chasing, and that you might even be able to find an attorney to take that on a contingency, depending on how strong the case is. You know, but for a $50,000 note, you probably there's not you're gonna have a hard time finding an attorney to take it on contingency, which means seller or whoever's trying to collect that note is gonna have to be paying out of pocket hourly fees. Now, the fees here in California are ridiculous. I mean, your attorney fees range anywhere from about 400 to $1,600 an hour.
yes.
Wow, those
Yeah.
guys think they're worth something.
So and average, if you're out in LA or probably San Francisco and all that, you're generally looking at somewhere between 700 to $1,000 an hour. Um,
How about as a penalty? I mean, I'm all for penalties and teeth on these things. And if someone defaults, you just say, well, you're going to pay the attorney's fees. We're going to double the interest. We can do this, this, and this. I guess. And if they sign that note, that has got some teeth, I would say.
yes. But do they have the
No,
assets? Because you have teeth and you can go to court and you can win. You can have all the facts on your side, the law on your side, and everything else. You get a judgment. Can you collect on it?
Well,
Do they have
yeah,
the assets to support that judgment?
right. Well, it's called loaning money to a bad person, or it's stupid. And so hopefully you wouldn't write the note to someone that couldn't pay it back.
Yeah.
But yeah, good enough. good point.
But that's another reason that I prefer, especially for a retiring seller, if there's financing involved, let the bank do it. That's the business they're in. I mean, most of my sellers don't want to change careers. They're not going from business owner to lender. That's not the business they want to be in.
That's a really good way to put it. Yeah, good way to put it.
So yeah, they're not interested in going into banking.
Real estate seller
By the way,
financing would be
though,
different because you have a lien position, but
yeah,
right. Yeah.
Yeah, I guess you
exactly.
could say you could maybe get a lien against, if they paid cash, you could get a lien against certain assets, maybe.
It's
You
all
know.
fairy dust except for real estate.
Right. And you can get a lien. You can file, depending on your purchase agreement. Your purchase agreement may allow you to file a lien against the assets of the business. That's great. So you can file a UCC1, but you're always going to be subordinate if there's an SBA loan. The seller's note is always going to be subordinated to the
Yes.
bank's note. So they're always in second position. So if there's any kind of a default, they still can't really do anything.
What are you going to
In
do?
my
Collect a bunch of equipment and inventory you don't know how to sell?
Yeah.
in my
Yeah.
case, the two buyers are cash with a small note. Cash with a small note. So no underlying subordinate
Okay.
to the note.
Yeah.
So that makes it a little bit better in my mind. Then
Yeah.
you can do the UCC filing. You are in primary position.
Right.
And
And then I would ask the buyer, what collateral do they have? How
yeah,
are they going to
yeah,
collateralize a note? If it's only the business assets, fine. And then the seller may be willing to do that. But again, the conversation I have with the seller is, are are you happy if the money you get at closing is the only money you ever see?
that's a good question.
Are you
That's the question.
satisfied with that? It's like, do you need the cherry on top? Do you need the whipped cream on the hot chocolate? Or is the hot chocolate okay by itself? Right? So, and you just give them the option because every seller is different. You never know. It depends on their motivation, you know, depends on the terms. There may be something you can do in exchange. Um, it's like, okay, well, we'll carry a note, but a seller may say, yeah, I'll carry a note, but instead of giving you 30 days of training and support, I don't think this business is that complicated. And, I'll give you 10 and then I want to be on my way. I mean, there's just different ways to negotiate it out.